Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the one, the only NIO. Now, for those of you that don't know what NIO is the electric car manufacturer based out of China. A lot of people compare them to the next Tesla or a company like that, company that carries a lot of long-term potential, but definitely has a little bit of a higher risk, higher reward. Now you guys can see that this thing has gone from $1.20 all the way up to around $66 a share. If you guys would have bought and hold, and bought at the lows, sold at the highs, you would have had a return of over 3,300%, which is absolutely crazy. Definitely outperforming all of the indexes. But the thing about NIO is this year hasn't been the greatest, right? If you guys actually look at the chart, we will remove the drawings here. The reason why is because it'll make it a little more easier for you guys to kind of see what's going on. So you guys can see this dotted line here represents a year. So looking at this year, you guys can see that NIO hasn't been performing pretty good. It actually has been down around 30% in value. Now, the thing about that is I always think, okay, that brings the opportunity to buy in on a discount, which that definitely could be true. But a lot of people have been bashing NIO until pretty much today. So you guys can see that NIO is up around 3% today. But why is that? Well, a lot of Wall Street analysts actually looked at NIO and stated that this company is worth a lot more. So we're on the Motley Fool right now. You guys can see that NIO was up 3%, and this is because Wall Street analysts shared an upbeat outlook for the company's performance in the second quarter earnings report. So I think that's a very strong thing for NIO. I think that's going to bring a lot more investors to look at it, to buy it, and overall hop in. Now, one of the main reasons too why I love NIO is just because of the overall growth we've seen from it on the stock side and honestly on the earnings side. So if we actually look up NIO revenue, what we're going to find is a very strong increase. NIO brings in around $2.4 billion, okay, which is awesome because look at this. This is a 500% increase. Now, the thing about that is in March 2021, that was a 200% increase. So the company on the revenue side is carrying so much potential. It's crazy. But anytime you evaluate a company, revenue is not everything, right? Revenue isn't everything. You want to make sure that one, the company is growing on the revenue side, and you want to make sure they're profitable. But NIO is not profitable just yet. This is very similar to when Tesla became profitable. Okay, NIO has a margin of negative 38%. So what that means is for every $100 they bring in, they actually lose right around $38, which isn't the greatest, but Tesla was just like that. All of the automotive companies, when they were this small, weren't profitable. They were really focusing on customer acquisition and revenue. And I think that's a pretty good thing about it. All right. But if we look at NIO's long-term debt, this is one of the main reasons too why I love it. Okay. They have around $1.5 billion in debt, which may seem like a lot. Okay. But if you compare it to their cash on hand, they have around $7 billion in cash. So they have literally almost five times the amount of cash than debt. So the reason why I like that is because if NIO ever slows down or goes through a hard time, they have enough cash to get through a hard time, to continue to pay off their debt, and to use that cash to reinvest it into the business and keep growing it until it becomes profitable to completely fund itself. Okay. Now, breaking down the chart, you guys can see it does have some very hard resistance here at around $65, okay? It hit it multiple times and we did get some sell-off. It does have some nice support near and around $33, right? So it came in contact multiple times and we did get buying pressure. But right now we're on a short-term downward trend and a long-term upward trend. So recently, all we've seen is just consolidation. So I would classify this $50 mark as some resistance. The reason why is because it's hit it multiple times and we've gotten a lot of sell off there. So I think to actually get in on a good buy would be to try to get in near and around $35. For me, anytime NIO falls under 40, I think it's a good buy. I think it's a bargain. But a great way to invest into a company like NIO would be dollar cost averaging. So what that means is you don't have to try to time the stock. All you do is you figure out however much you want to invest. So if you want to invest, let's just say $100 total into NIO, okay? What you do is you invest $10 a week over the next 10 weeks, or however long you want to, or for the principal amount. So what that does is it gets a good average price for that time period. So the beautiful part is if NIO continues to rally up, just like we've seen in the past, in the long term, then you make money, right? Because the stock value goes up. But if it falls, just like we've seen in here, all you do is you just average down your position. So when it recovers, you make a lot more money. It's a great way to invest into a lot of these growth stocks because, yeah, NIO is going to carry a lot of risk, and you have to understand that before you guys invest. It's going to be more of a volatile stock, and if you understand that, you guys will be just fine. So that is my total outlook on NIO. I hope you guys enjoyed it, and if you did, hit that like button and subscribe, and we will see you later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.